Hi there, Serial Trader here. I'm just going to do an update on the major US indices. And I haven't looked at this for a while since I think before I went on my trip to Iceland. But now I think it warrants some discussion at the current juncture. So I just want to go over a couple of big picture potential scenarios. And I'll start with the first one here. And the first one is where we put in a large degree wave 3 in January of 2018. And ever since then, we've been doing this A, B, C, D, and possibly starting E in what would be an expanding triangle wave 4, as opposed to a contracting. And this is a pretty rare pattern, although there's certainly examples of it occurring in the past on the indices. And basically, in an expanding triangle, you have a series of lower lows and higher highs, and then you make your final low in the E wave. Or if you're, doing an expanding triangle in the other direction, you'd make your final high in the E wave, but in this case, the final low, and then you start the next impulse wave to the upside. So if this scenario were to be in play, you'd be looking at an enormous drop below the December lows from the recent highs we just put in. Some may find this hard to believe, although, a lot of people would have found this drop we had into the December lows very hard to believe, but it happened anyways. Now, I still put this as a lower probability scenario, at least until there's a little more price actions to suggest that maybe we're doing this. And for me, that would be taking out the lows here near the beginning of June. We put in that significant pivot from that three-wave decline, and that was at 2728.8 here on SPX. So taking out this low here would give this a corrective three-wave look, okay, and I'll show you what I mean there. And it would give this appearance. It would give us an A, B, and C up. Okay, and let me just drop this down one more degree there, and this as well. Yes. So if we take out this June low, early June low, that would give this a corrective three-wave look, and now we'd be looking quite a bit lower if we were to take out that support level from June 3rd. Now, that's a big if. Currently, there's no reason yet to believe that that's going to happen. It's just if it does happen, this scenario gains some traction. But another scenario that maybe a lot of people will like a lot more. I don't really have a bias here, but I know certainly there's a lot of people that really seem to be kind of perma-bulls, especially with the indices, and okay, that's fine. So in this scenario, this is where we had a wave 3 peak here in September of 2018. Then we just had this simple ABC down for a large degree wave 4, and now we're working that large degree fifth wave, and of that fifth wave, maybe we got our 1 up, our shallow retracement down in 2, and now maybe another 1, we'll do another 2, and then 3, 4, 5 of 3, and then a 4, 5, okay? So this might just be from the June low, we did a 1 up of a large degree 3, and now we're doing that smaller degree wave 2 retracement of that 3. So in that case, we'd be looking for a retracement, the bottoms above the June low, and well, we certainly know what to look for. And then obviously that would set up a nice bullish entry if this is the case. So those are kind of the two big picture scenarios. These are weekly charts I was showing. Now if we go a little closer to SPX, and this is a 30-minute price chart, this is kind of what I'm looking at. So from the top, we have a 1, 2, 3, 4, 5 leading expanding diagonal wave 1. That's the best way I can count this. It doesn't count as a clean non-overlapping 5 down for 1, but there are 5 distinct legs down, and they are in the expanding fashion. So expanding leading diagonal wave 1 is how I'm labeling it here. We had that deep retracement wave 2, although it was a nice 3-wave retracement. You can see it here on this 30-minute chart, and I think, if I'm not mistaken, it was a pretty deep, might have been a 786 retracement of the initial decline. And it was, yeah. So you see right there. So from the swing high to swing low here, we did a nice 786 retracement. So nice deep wave 2. I like to see wave 2s do a deep retracement. It adds some credibility to them, in my opinion. So all right, deep retrace for wave 2. So 1, 2, we did a nice strong third wave down. That definitely adds some credibility that this is in fact some sort of impulse sequence overall to the downside. Looks like a nice ABC up so far for wave 4. And then that would suggest, at least one more leg down in this wave 5 to complete either a larger 1 or A down. And then we'd be looking for that bounce up in 2 or B. And then another leg down in 3 or C. So really the trade setup here, if there is one, at least short term, wait for this to find some sort of temporary bottom. It's getting pretty oversold here on some short-term metrics. So 4-hour chart. Hang on here. 4-hour chart in the oversold condition, and that certainly led to some good bounces here previously, both here and here. So 4-hour oversold, and I think hourly certainly oversold and just starting to come off that oversold condition here on the hourly chart. So back to that 30-minute chart, and let's adjust. Okay, yeah. So yeah, as far as trade setups go, I like to see one more leg down to make this reasonably clean 5 down. And again, that's for either a larger A or B. 1 or A, and then we'll be looking for a big correction up in 2 or B. And if we get that, if we get something clearly corrective, something like that, ABC up, that would be a potential selling opportunity or shorting opportunity. But we have to see how this develops first. The setup isn't there yet, although I'm certainly on watch for it. And also judging by the futures here, so let me just quickly go to ES. So on the futures, if I can go, maybe a 4-hour chart we get on the futures. So on the futures, we've already made new lows below Friday there. So if that translates over at least partway into tomorrow's session on SPX, if that's the case, and you see SPX here, on Friday we went as low as 2914.1, and on ES, so on the futures here, we've already gone as low as 2894. So if that new low translates into tomorrow's session, that'll give us the potential for completing this initial 5 down, and then that might actually be a good short-term buying opportunity if you want to play that into this 2 or B. But at that point, you'd be expecting it just to be a partial retrace and then set up for another leg down. So, I mean, just to estimate where this has gone, just based on where the futures currently went down to. So say we get that, a retrace up to the 618 or something like that. That might be the nice bearish setup for a trade entry. But certainly, short term, you could see a bullish opportunity tomorrow, or at least as early as tomorrow possibly, if we make that new low and then start bouncing nicely off of it. So those are a couple setups I'm looking at. Might go long tomorrow if I see what I like as far as the setup goes, and then with the idea of once you get that retracement and it looks mature in some sort of corrective wave up, get rid of the long and maybe try a short for that next that anticipated next leg down. All right, so there's that. And if we just go to the 4-hour chart here, that should be decent. Yeah, so 4-hour chart. I'll just go through kind of what I'm thinking here. So overall, so if we're in the more bullish big picture scenario there, then we're looking at this just to be a retracement of the move off the early June lows. So the 50%, which we haven't gone to yet, would be 28.78. I like how we've had some initial reaction off that 382. Often you have that move down, initial bounce off the 382, and then you go down either to the 50 or the 618, or even deeper, and then you make your final low and then go higher if you're just doing a retracement within a bullish trend. So we definitely be watching these fib levels, see how deep we go. And if we get below that June low, that elevates the more bearish scenario and might warrant some more aggressive bearish positions. But for now, play it on the conservative side and treat this as though we're just going to do a retracement, although possibly a deeper retracement from this wave off the bottom here from June. So that's what I'm looking at there. So probably good as far as going over the wave scenarios for now. So the Thinkorswim candlestick chart. Now the daily chart in SPX, you see we've finally broken the T line here on the daily. 3 T lines cross below the T line, so definitely a short-term downtrend. We're coming off that overbought condition. We're not oversold yet on this oscillator. Some initial reaction of this 50-day simple moving average, but that doesn't mean it's going to hold. It just means that there was some initial, reaction there, which is often the case. So look for that to fail, and certainly it will fail if the overnight futures move translates into tomorrow's regular session. But as far as actual signals, we did have a bearish engulfing candlestick here, and then we closed below the T line, and then we've been in a nice downward trend since then. So definitely had a candlestick signal to give you the heads up that this was starting. And we closed below the T line, so that was significant. And we got below this shorter term support level around 29.70. So we have broken trend here, at least on a short term basis. The weekly chart here on SPX, is there anything notable? I think there is. So we had a weekly bearish engulfing a couple weeks ago, and it didn't have any follow through. In fact, we invalidated it just the week after. It made a new high, but then we didn't quite, let's see if this actually is an engulfing. Closed at 30.25 this week, opened at 30.24. So not quite a bearish engulfing, although it certainly has the spirit of a bearish engulfing, in that if it opened 1 or 2 points higher, we would have actually engulfed 5 prior weeks. So it's definitely got the spirit of a bearish engulfing, despite technically not quite meeting the criteria, but although by a very small margin here on the weekly chart. So this definitely looks like a reversal candle to the downside. We've closed below the weekly T line, and that's certainly significant. You see over here, after we got below the weekly T line, there was definitely some downward follow through. We're coming off the overbought condition on the oscillator, and obviously nowhere near oversold, or even back to this previous level where we found support here. So it looks like there's some downside potential, and again, even if it's just a retracement within this overall move up from the June lows, that's still a decent potential trading opportunity. And obviously, if we break below the June lows, and that large degree expanding triangle scenario comes into play, well, there might be some very significant bearish trade potential there, but we're not there yet. So we'll evaluate: is it just a retracement, or are we going beyond? We don't know yet, but there's still a trade set up to be had here either way. All right, so that's SPX, and everything else is looking similar. The Dow very much in a similar pattern. Again, are we just doing a retrace of the move off from the June low, or are we going to take it out? Same idea. Also having a reaction here at the 50-day simple moving average, same as, or very similar to on SPX. And the Dow starting to get into the oversold condition on the oscillator, so watch that. Again, this coincides pretty well with being looking for a short-term bounce up in either a B or a 2 after we make that low, or I should say if and after we make the low below Friday's low. And on the weekly for the Dow, let's see what we got here. Anything notable? I think we do. Okay, so is this a bearish engulfing? Let's see, we open this candle 27,281. What did we close this candle at? 27,192. We open at 27,192.24. Okay, so not, by a fraction of a point, not quite a bearish engulfing weekly candle, although, again, definitely has the spirit of one. if you want to be that strict about it. And close below the weekly T line. So breaking trend here. And in the overbought condition on the weekly, just starting to come off that condition, nowhere near oversold, obviously. So Dow very much in the same kind of situation. Let's see here. Onto the NASDAQ composite. And okay. So NASDAQ composite on the daily chart. Again, they all did the same thing. They had a nice move up from those June lows, all the indices. We had a nice daily bearish engulfing candlestick here, close below the T line. We had this fake out here on Thursday, big upper shadow rejecting it, again close below the T line and trending down. So had a reaction off the 50-day simple moving average, just like all the indices. Not quite in the oversold condition here on the oscillator. So again, if we can make a higher low once we're done this move down above the June lows, it will set up a good buying opportunity. But if we break the June lows, we have to start looking, at a more bearish bias. But short term, there are still trades to be had, as I pointed out there. Weekly. Okay. So the weekly of the composite, again, not quite meeting the criteria for a bearish engulfing, but certainly has the spirit of one. And you can see we took out multiple weeks of prior price action in a single week. So the rate of change here increased quite a bit. And usually when that happens, it's not just, you have a little blip down and you're done. It's usually a more lengthy or deeper correction or both. Definitely close below that weekly T line. Coming off that overbought condition on the oscillator. So all the indices look basically the same here technically. Okay, that's probably good for that. Now on the VIX, VIX definitely had a nice pump up last week. And we did get above the VIX spike we had here when we made the June lows. But we didn't get to the VIX spike that we had in May. So to me, the VIX is still kind of trendless as long as we stay below this spike we had in May. I think that was on May 9th. We had this VIX high of 23.38. But technically, we've made a higher low in VIX compared to this low over here. And that low was just over 11. It was 11.03. And we made that on April 17th. Yeah. So the April 17th low held. We made a higher low here on July 25th, and that was at 11.69. And now if we can get up here and get a higher high above that May VIX peak, then we may actually be entering a VIX uptrend, which obviously isn't a particularly bullish thing for the market. In fact, it's a bearish development. But unless we break that spike high there, 23.38, then I'm not going to really read too much into VIX. But if we do break that, that will be notable, and will probably be coinciding with more significant market weakness and possibly that larger, bearish scenario I discussed. All right, so now on the VVIX tool, we got a nice sell signal here. So VIX was making lower lows here. VVIX made a higher low, so you had the VIX-VVIX divergence. Then you got above this red moving average on VVIX. That was step 2 of a sell signal. Then we got below the blue moving average on SPX, and that was the confirmed SPX sell signal, and then we've been trending down since then. So that gave a nice, kind of a pre-warning when you had that divergence between the VIX and the VVIX. And then obviously when the criteria was met, it actually did offer a pretty good sell signal. And if you took that signal, it really didn't go against you too much. It just kind of went sideways after getting below the blue moving average and then failed there quite nicely and started trending down. So we're on a sell signal here on the VIX-VVIX tool. Short-term wave count suggests a good bounce coming soon, but then likely further decline from there. So yeah, just basically going back to this chart quickly. Trade ideas for this week. Look for a nice, final leg down here, possibly as early as tomorrow morning. That could be a potential long setup from these oversold short-term conditions. Play the bounce up, play the retrace that's likely coming here. And then when that retrace looks like it's a little long in the tooth, fading, get out of that and maybe attempt a short. And if I actually play this myself, I'll probably put some videos out, some more timely ones, as far as actual positions or entries or whatever. But that's really my idea going in this week. So short term, there's certainly looks like a bullish trade coming up right away, and then potentially after that runs its course, setting up for a bearish trade. And then longer term, we're either going to decide whether we're doing this larger fifth wave up and we're going to stay bullish for a while overall, or if we break the June lows, then something like this might be more in play. But we don't know yet. For now, just play the short-term action. And yeah, that's probably good for now. Should be an interesting week. Serial Trader signing off.